Stocks in Asia were lower on Monday after a strong jobs report last Friday stateside moderated expectations that the U.S. Federal Reserve could soon be making a move on interest rates. In mainland China, the Shanghai Composite fell 2.58% on the day to 2,933.36, while the Shenzhen Component declined 2.72% to finish its trading day at 9,186.29. Hong Kong's Hang Seng Index dropped 1.66% following another round of protests that rocked the city on Sunday. At the same time, the MSCI Asia ex-Japan Index also fell 1.42%. In Japan, the Nikkei 225 slipped 0.98% to end its trading day at 21,534.35, while the Topix Index shed 0.89% to close at 1,578.40. Over in South Korea, the Kospi dropped 2.2% to close at 2,064.17 as shares of industry heavyweight Samsung Electronics fell 2.74%. Last Friday, the U.S. jobs report showed the economy stateside adding 224,000 jobs in June, well above the forecast number of 165,000 jobs. Strong numbers dampened Fed rate cut expectations and dented the argument for a 50 bullet points rate cut by the end of the month. European stocks ended Monday's session in negative territory. The Pan-European Stoxx 600 dipped below the flat line at the closing bell, with most sectors and major bourses in the red. Europe's banking stocks led the losses, trading nearly 1% lower after Deutsche Bank announced it would pull out of its global equities and sales trading operations, scale back its investment banking, and slash thousands of jobs as part of a sweeping restructuring plan to improve profitability. U.S. stocks fell on Monday as losses in Apple shares pressured the broader tech sector. Investors also braced for key testimony from the top Federal Reserve official and the FOMC meeting minutes later this week. Powell's testimony comes after a stronger than expected jobs report raised questions about whether the Fed will cut rates later this month. Traders have priced in a 100% probability of a Fed rate cut in July, but expectations for a more aggressive cut were tempered by the jobs data. The Dow Jones Industrial Average traded 115.98 points, or 0.4% lower, to 26,806.14, while the S&P 500 pulled back 0.5% to 2,975.95. The tech-heavy Nasdaq Composite lagged, sliding 0.8% to 8,098.38. The major indexes posted solid gains last week and notched all-time highs. Apple shares fell more than 2% after an analyst at Rosenblatt Securities downgraded the stock to sell from neutral. The analyst said the company will, quote, face fundamental deterioration over the next 6 to 12 months, unquote, as Apple's iPhone sales disappoint and growth in other products slows down. Solid jobs data fueled dollar demand across the board. After a rally on Friday, the greenback extended gains, albeit in a more modest manner. Euro USD received support around 1.12 and remains under pressure. The immediate meaningful resistance comes around the 100 DMA at 1.1255. On the data front, German industrial production ticked higher on the month in May. Industrial output rose 0.3% from April, coming in a touch below economists' expectations for a 0.4% jump and versus a revised 2% drop the previous month. On the year, however, industrial production fell 3.7% in May. This was an improvement on the 2.3% decline seen the month before, but worse than 1.1% drop expected. Other figures showed that German exports were up 1.1% on the month in May, while imports fell by 0.5% on the month. The trade balance widened to 20.6 billion euro in May from 17.9 billion in April. In commodities, oil prices are further being pressured by ongoing worries about demand as the US-China trade war, heading into its second year, dampens prospects for global economic growth, which strongly impacts oil demand growth. Brent touched a high of $65 but failed to stay elevated once again and retreated, closing in the negative territory on Monday. Now the prices are trying to regain the $64 figure in a muted trading. Iran on Monday threatened to restart deactivated centrifuges and step up its enrichment of uranium to 20% in a move that further threatens the 2015 nuclear agreement that Washington abandoned last year. Washington has imposed sanctions that eliminate benefits Iran was meant to receive in return for agreeing to curb its nuclear program under the 2015 deal with world powers. Industry and government data for release later on Tuesday and on Wednesday is expected to show that U.S. crude stockpiles fell for a fourth consecutive week, dropping 3.6 million barrels. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.